Okay, recording this video on Saturday, the 29th of February, 2020. It's just gone 6 p.m. Chicago time. Hope you are doing well, and I do hope you had a good week's trading last week. Holy hell, that was unbelievable. We put in 540 points in the week, kind of top to bottom. Down 16% from the highs. Big rally at the end of the day, last 45 minutes or so of the mini on Friday, but apart from that, it's just down, down, down kind of all week. And super fast moves. It felt like, we had a couple of months of activity compressed into a week's trading, and the moves were just extreme. The speed that everything was going at. I mean, a lot of it, I think, was kind of bots fighting bots. Because the average trade size was down quite low, and had to move my targets out and my stops out in order to just stay in with the massive kind of volatility. But anyway, so do hope you traded it well. The question is that it? Is that, such a big move, we're going to have a relief rally off of that kind of come Monday morning? What's kind of the story? I don't think so. I think we've still got to test this low and actually go for a even more kind of dramatic kind of volume on the downside. But I'll show you my charts and just why I think that is the case. But this is the usual kind of setup. I'm going to go through a bunch of charts with this kind of setup. Right and left, we've got on the right-hand side everything to do with price and better sine wave on it, showing us the trends, uptrends and strength shown in red, downtrends and weakness shown in gray. Yep, here we go, white. And below the price bars, we got better sine wave with these cyclical crosses shown in all three time frames. Usually I just show the intermediate and the highest time frames, the thickest lines, and these other kind of bolder lines. I've actually shown the lowest time frame as well, these thinner lines on here. So it looks like a plate of spaghetti, but I'll explain these kind of as we go through the charts. So it's better sine wave on this side, and on the other side of the chart, we've got everything to do with volume. So we've got volume momentum here, which is a momentum indicator based on buying and selling volume, and then average trade size showing professional and amateur activity. Blue bars are professionals, yellow bars are amateur bars, and that's based on the average trade size. So a couple of things to note. First of all, we're kind of down on this E-mini chart, day and night continuous session at ES. We're down a pretty extreme volume, so 8.4, negative 8.4 on better momentum here, which is close to what we had at the low coming into December of 2018. So that was an extreme kind of reading. We've reached that kind of extreme reading on the way down. So we've definitely kind of got to that initial exhaustion. Even when we had an extreme reading here, we had a kind of big bounce from that level, and then we kind of came down and saw that again. So it's a pretty big reading, and you can see on the way down we've got blue professional bars kind of starting to pick it up. So you'd think, well, maybe that is it. Friday, the rally we had at the end of the day, that was people kind of picking up this low. Maybe that's it for the end of this kind of down move. We'll have some relief rally back up and test to wherever, halfway, the full way beyond, who knows. On the price activity, you can also see we've come into a cyclical cross on better sine wave on the lowest time frame. So this is the highest, the lowest time frame. The last move we had, it was a pullback to end of trend, and that's why we fell off from these levels. We'd reached an extreme. We got exhaustion buying, some blue professional bars coming in on some of the charts on the Dow, on the S&P500 chart itself rather than the futures chart and so on. So that was why I was talking in the last week's video that was kind of a top to be wary of. So we've had this drop, and we've got cyclical support in due on this lowest time frame. We are still kind of making pullback to end of trends on the intermediate time frame and the highest time frame, or some kind of support to resistance move at that point. I talk about rippling, these pullback to end of trends kind of rippling through the time frame. So we've seen one, that's a left shoulder on the lowest time frame. We've got to put in another type move, a support to resistance move on the intermediate time frame. But on this daily chart, we're in due for some kind of bounce because we got that cyclical support kind of coming in there. So it's looking good in terms of exhaustion sell, blue professional bars coming at the lows, and a cyclical support in due. However, we need to go lower down in the time frames in order to just kind of pinpoint that turning level. And I'm going to show you that on this next series of charts. So again, a bit cluttered on a small screen here, but on a big screen, it's perfectly kind of readable. And this is where I talk about the end of trends rippling through the time frames. So better sine wave shows you the breaks of support and resistance into trend moves, and then it shows you where that trend move is likely to end with a pullback to end of trend. When I say end, that doesn't mean necessarily go into reversal mood. It could mean just into congestion, but the trend move has kind of finished. And as an illustration, I'm just going to show you what was happening with these pullback to end of trends rippling through the time frames when we had the high. So let's go back. This is so you can see this vertical line indicator is on all the time, all of these charts synced up, and you can see us going through these end of trend moves. Each of these charts is a little bit higher up, so we start with a 5, a 9, a 15-minute chart, then 27, 45, 81, 135, the daily chart and the weekly chart. And these have been chosen because there are an equal number of those bars during a day. So there are 3 135-minute bars exactly in a day session of the E-mini. There are 5 81-minute bars exactly in a one-day kind of chart of the E-mini. There are 9 exactly 49-minute bars in a day session of the E-mini and so on. So you can see what I'm doing. Each of these has been chosen because it's a little bit further up with the time frames, and there's an equal number of bars, so the calculations kind of make sense. So you can see here as we're topping out up here, we see pullback to end of trend on the 27-minute chart. So we're starting to see these pullback to end of trends rippling through the time frames. The next time frame up, 45-minute chart, there's our pullback to end of trend. And then on the 81-minute chart, a little bit further on, you can see another pullback to end of trend rippling through the time frames, and that's syncing up with pullback to end of trend on the daily time frame. And then, so rippling through the time frames, then we start breaking support. So we start breaking support on the 5-minute chart here, on the 15-minute chart, on the 27-minute chart, the 45-minute chart, the 81-minute chart. We're breaking that support on the way down. You can see we've broken it here and here. Now, we're due for cyclical support on the daily chart, but that has to sync up with pullback to end of trends on something like the 45-minute chart. That would be 2 time frames down from the daily chart. 1 time frame down would be a factor of 3, that's the 135. Divided by the 135 by 3, that gives you 45 minutes. So this is 2 time frames kind of down. And you can see in these time frames, 27, 45, 81, and so on, we have not started to see pullback to end of trend on these time frames. So I would expect to see pullback to end of trend on a couple of these low time frames. Yep, on Friday's activity, on the 5-minute, the 9-minute, and the 15-minute. There we go, pullback to end of trend starting to come in. So starting to put in some kind of left shoulder, but we have not put that in on these other time frames, 27, 45. So that's what I'd be looking for, Monday, Tuesday's kind of activity to that. To look at that. And so when you see those starting to come in on those time frames, syncing up with cyclical support on the daily chart, that's when a low is likely to be put in from which we can have kind of a relief rally. So that's one thing to say. We've not seen those. Now, tops are made more gradually, and so the end of trends appear over a longer period of time. We gradually roll over from tops in general, particularly with indices. Bottoms tend to be spiky or can be spiky on the way down. So you would expect to see pullback to end of trends. That's definitely so, but they could be made very quickly because you get kind of a spike down and all of a sudden people realize this is a buy of a century. I'm going to jump in, and they just jump in en masse, and it rallies really quickly away from that low, whereas highs, tops are made kind of more slowly as people gradually take profits. The down move happens when people panic out into that move, and so it swiftly kind of goes to the downside, and we've definitely got some kind of panic selling kind of going on. We're going to have a relief rally. Market breathes in and out. That's always the case. The question is where it's going to rally from and where is it going to rally to if we're going to go to new highs because of the coronavirus is not such a big deal, or whatever the news is that might drive it to new highs, or do we just not get there and people say, as soon as it rallies back, all the pros are kind of getting out again and forcing it to lower lows. So one of the points on the way down is here, yes, we're due for some kind of relief rally because we got this cyclical support in due on the daily time frame. However, timing that kind of bottom We have not had end of trends happen on these lowest time frames, and I'd expect to see that before we get a proper rally. The other thing is, I don't think we've actually seen, I mean, it's been extreme selling. I don't think we've seen extreme selling values on better momentum yet. This is a 45-minute chart. MTF, so this is the multiple time frame version of the indicators. So you've got all three time frames on one chart. So on the 45-minute chart, you can see the pullback to end of trend. Those are the daily levels here. And we broke into a downtrend, having had exhaustion buying and a flush pattern, and we've come back down here. So this is the cross here on the highest time frames. Here, these really solid lines saying on the daily chart, on the daily time frames, yes, we're due for something in terms of support at this level. However, if you see on the other time frames, so the 135-minute time frame, which is that intermediate line, and the 45-minute time frame, which is that lowest time frame there, we're still below support, and we have not put in the pullback to end of trends. So that is this time frame and this time frame. You can see those we're below those support levels, and we've not put in the pullback to end of trends yet. So we got to see that. And then the other thing is we've actually not seen exhaustion sell. So this was our exhaustion buy here on the 45-minute chart. And it was, we were making higher highs with exhaustion patterns, with exhaustion volume and Rambo patterns, which I always say they're unstable. When you see exhaustion patterns with Rambo patterns with exhaustion buying, that's unstable because that's showing a small average trade size. So that's amateurs playing here en masse in huge volume, and that's unstable. And then we roll off from there and you see the professionals have come back in with blue professional bars kind of down here, the 20, anything kind of below 3,000. They've kind of been stepping in, but we don't have exhaustion sell. So my theory would be that we're going to have a little bit of a relief rally back, Monday, Tuesday-ish, to put in those pullback resistance levels at some point, and then another kind of flush down. So we get pullback to end of trend. So the pullback to end of trends have to go in, and on those end of trend signals on the way down, wherever those levels kind of reach, that's when we're likely to see the exhaustion sell. And whether that's below 2,900 or we have a relief rally back to these type of levels and only come back to 3,000 or something like that to get those exhaustion patterns, who knows? It could be a shallow little move on Monday and then it keeps on moving down below 2,900 until we get those exhaustion sells. Don't know. We've got to wait till, let me just put on the lowest time frame here so you can see that line. So there we go. So you can see little squiggles happening here. So this is heading back up to cross, and when that crosses likely on Monday, that's when the next kind of test down is going to happen, I assume. So let's see what happens on Sunday night into Monday. If it kind of gaps down and opens kind of below these levels, we're going to have to reform this kind of jumping off point here again. But let's wait and see. When this comes back up, it'll come down into a pullback to end of trend move. We'll test those lows down at 2,900, and that's when I expect the exhaustion selling. So crazy though this whole week was, we might not have seen this kind of extreme reading yet, which is kind of, a little bit scary. Same picture on the 15-minute chart. So again, we're kind of going down into a further kind of lower time frame. So yeah, pullback to end of trend starting to happen on the lowest time frame, the 15-minute chart here. We're likely to kind of rally back into resistance on the intermediate time frame. So the squiggles here that you can see as the two lines coming together, so that's the intermediate time frame on the 15-minute chart is the same as the lowest time frame on the 45-minute chart, because 15 times 3 is 45. A little bit complicated if you're not used to using kind of multiple time frames, but that's what it is. And then again, so when we topped out here with all these moves up at these highs with exhaustion buying, bearish divergence kind of coming in, well, this relief rally just formed a flush pattern, flush buying kind of here. On that low on Friday, which was a pullback to end of trend on this time frame, we didn't have an exhaustion selling, an extreme selling reading down here. So that's what I'm saying. It's like we're going to have another move down, I think, and I think we're going to reach really kind of extreme levels on better momentum. So that's going to be kind of a scary kind of half day when that actually kind of happens. So what else do I need to show you on these charts? I'm not sure. The charts made on different indices made different patterns at the top. So this is the Dow at the top. We had blue professional bars here with exhaustion buying, bearish divergence, pull back to end of trend, a nice kind of pattern to roll over. So the Dow was making one kind of pattern. The NASDAQ, in terms of the professional bars, had come in early at 9,000, and that's why I'd got out of my equities positions in Australia because of this pattern kind of going on here. So I've been out in cash for 3 or 4 weeks. And then we kind of made new highs, but not blue professional bars at those, but that was the bearish divergence that we kind of set off from. And then the S&P 500 index, again, similarly made a different pattern. It was definitely exhaustion buying, bearish divergence. There weren't blue professional bars up here. There were kind of Rambo patterns earlier on in the sequence. So you had to kind of judge it a little bit because all the indices were showing a slightly different kind of pattern. But then, what's interesting is on the NASDAQ chart, the momentum, even though we've had all of these selling kind of down here, better momentum's not even gone below zero. So that's fascinating, interesting to me. So we'll kind of just have to wait and see over the next few days what this reading kind of ends up being. And then just lastly, just to revisit that Apple chart that I did last weekend, which was talking about professionals buying and selling. They were buying down here on exhaustion, sell bullish divergence, blue professional bars, bang. We start to rally into a strong trend, exhaustion buying, bearish divergence, blue professional bars at those highs, bang. And then, we've had a nasty kind of sell-off. The blue professional bars have started to come in here. We've got a cyclical cross on the lowest time frame. So at some place around here, we'll find a pullback support, and this will go to run pullback to end of trend on the Apple chart. And then we've got to do it on the intermediate time frame, and then we've got to do it probably on the highest time frame as well. So there'll be some time to run on this. And just like the NASDAQ chart, the better momentum levels, they've not even gone kind of below zero on Apple. So I just find that interesting, not kind of saying that means anything necessarily. We'll be able to judge that over the next week or so's trade to see actually what happens there. So we're in due for some kind of relief rally. But with better momentum, we've not seen that exhaustion sell. So I'm going to be looking for that before saying this thing's found a bottom and we're going to rally from here. Everything has to kind of come together. The exhaustion patterns, the blue professional bars, and the pullback to end of trends to kind of mark that bottom. And I just don't think we've seen all of those three things kind of come together yet. So there we go. I might do another video this weekend on gold and silver. Is really interesting. Might do one on that. Might do one on the dollar indexes versus the euro and Japanese yen. Anyway, I hope you're enjoying a restful weekend, and let's see what next week holds.